Is kicking off in Japan. What should investors watch out for, and what are your focuses?
Well, certainly the equity markets have rallied very hard over the last 4 months, and particularly even though the yen is already trading close to 100, a lot of companies won't have yet started to revise up their numbers. The reason for this is there's about an 180-day lag between companies actually changing forecasts post a very significant move in the currency. So I think it's still wait on hold for a lot of companies given the recent move in the yen dollar rate, and it's going to be really guidance that's going to be important for this results season.
How much and what kind of impact, if any, will Abenomics have on corporate results for this earnings season?
Well, I think the two things that might start to come about, one is that what people's expectations are in terms of changes on corporate investment behavior and also hiring. I think that's the two longer term issues for Abenomics following the last BOJ meeting as to what changes to the animal spirits in corporate behavior that we are looking for. And I think really the most clear-cut evidence of any inflation will come through raising wages, and equally for corporate behavior it's got to come through capital spending. So again, it's really much of a guidance issue for us. If provided companies start to look or appearing to be a lot more confident, I think the markets will continue to at least hold in their current pattern at the moment in Japan.
The biggest Chinese companies are due out with earnings towards the end of the week. Are they likely to disappoint, or will we see some upside surprises?
Well, generally the Chinese earnings affair, so year to date, has been quite a mixed affair really, and it's been the fact against a backdrop of reasonably strong growth in China. I think the two issues really that still surround the Chinese corporates is one is that margins have been very, very much under pressure. We've got, I think, evidence of stagflation in China at the moment. And secondly, if we do believe that the Q1 GDP numbers were as poor as they were revealed, then it really does mean that the corporates are not likely to be revising up guidance either. So I think the bottom line on China is it doesn't pay to be too bearish at these points in time and be very much pragmatic, but I don't really see much news flow in the short term that's going to engender a rally in Chinese shares.
Which asset class should investors find a haven in at a time when commodities, equities, and the yen are getting sold off?
We've been slightly more concerned about the commodity complex. I think the consensus has been about a rotation out of fixed income into equities, but the evidence so far has been actually a rotation out of commodities into fixed income and equities. I think there's a couple of reasons for that. We've had a stronger dollar, which has undermined some of the purchasing power value of commodities, particularly gold. Global growth is looking a lot weaker over the last 3 months. And lastly, I suspect that we've now got supply side issues on a lot of commodities, including copper, and I think that's really now weighing on sentiment. So in terms of the asset classes, I don't see any significant changes on the yield theme, and equally I think equities tend to do relatively well provided risk-free rates are being compressed as they are.